in terms of global oil markets that are on edge as Qatar really wants crude that could be soaring to, that $150 a barrel mark as well. Let's also get you a quick check in terms of what the impact is going to look like and also the latest developments. In fact, you do have Somit joining in with just that.
The Qatar minister has already warned that crude prices could move up to $150 per barrel. But if you look at the current up move that we have seen, that's no less harming for a country like India. Brent crude has moved up nearly 31% in the last 6 trading sessions, and it is now trading around $93 per barrel as against $70.7 per barrel that we had seen a week ago. The level at which crude is trading is the highest that we have seen since September 2023, and on a YTD basis, that is on a year-to-date basis, Brent crude has gained nearly 52.3%, which is the best start to the year, the best YTD gain that we have seen at least since 1997. So how will higher crude prices impact India? Obviously, it will impact given the fact that our energy requirement is nearly 85%, which is completely dependent on imports. Now, though the intensity of oil dependence has come down, but still we are importing around 85%, and that will definitely impact our economy firstly. Now, as per analysts, every $10 per barrel increase in crude oil prices widens our current account deficit by anywhere between 0.4 to 0.5% of the GDP. If you look at the inflation, the CPI, that could increase by around 30 to 50 basis points, and WPI could increase by around 80 basis points if this increase in crude prices is actually passed on to consumers. And when it comes to the GDP number, that could come down by around 15 basis points as per analysts. Now, when it comes to stock or sector-specific action, oil marketing companies stand to get impacted the most because higher crude prices leads to lower marketing margin or lower gross marketing margin that they earn on selling every liter of petrol and diesel. Now, every 0.5 rupees per liter change in the gross marketing margin lowers or impacts the EBITDA of IOCL, BPCL and HPCL by anywhere between 7 to 11 odd %. For paint companies, for aviation companies, nearly 40% of the raw material cost or total cost is fuel, and which is directly related to crude. So that will also impact their margins. For lubricant manufacturers like Gulf Oil or Castrol, nearly 50% of the raw material is either crude or crude derivative, and higher crude prices will impact their margins as well. For tire companies, synthetic rubber, carbon black and various other chemicals. Now, the prices of these products or these raw material are derived on the basis of crude prices. So, if crude prices move up, the price of these chemicals will also move up and then thereby impact the margins. For cement companies, either directly or indirectly, nearly 40 to 50% of the total cost is crude related. However, the oil explorers that stand to benefit like ONGC, Oil India, HOEC and Vedanta, because higher crude prices means higher realization and higher earnings for the oil explorers. And generally a $5 per barrel rise in the Brent prices leads to around 7 to 12% increase in the earnings per share for ONGC and Oil India. But do remember that this short-term fluctuations will not actually lead to any major negative or positive impact for these companies. If oil prices continue to remain at these levels for at least 2 to 3 months, that's when we'll see the actual impact coming down on the economy of the country and also on the balance sheet and P&L of these companies.